Good morning, ladies and gentlemen. My name is Hardik Vaidya, and I'm your host for today's iconic event. It gives me great pleasure to welcome you to the Dun & Bradstreet BFSI and Fintech Summit 2021. The summit, ladies and gentlemen, is a tribute to the key contributors in India's financial services ecosystem. Now, before we proceed, before we move forward, I wanted to let you all know some fundamentals of the platform that we're operating on. You can choose to go full screen by clicking on the full screen button located at the bottom right corner of the center screen. In case your screen freezes, it might be due to the drop in the internet connection. Please refresh your browser window and it should be fine. Today, we'll share a virtual space with some very distinguished personalities. I'm sure you all, just like me, are eagerly waiting to gain a treasure trove of valuable insights from the eminent lineup of speakers that we have today for you. But before I move forward, please allow me to set the context of today's summit. The Indian banking, financial services and insurance BFSI sector was already undergoing tremendous change before the onset of the pandemic, especially in terms of a digital transformation. The pandemic only forced the sector to take a hard relook at business continuity and resilience strategies and consider changing how they delivered services. The BFSI sector, known for its traditional personal connect with customers, has now embraced the new zero contact approach. And despite this new low contact mode, the trust factor among customers has remained intact due to an intelligent deployment of advanced financial technologies. In today's summit, ladies and gentlemen, we will focus on how Fintech has led to a smooth transition to the new normal and take a peek into the changing face of financial services in the post-pandemic world. We have keynote addresses by eminent personalities, a fireside chat, and a power-packed panel discussion lined up right here today for you. We will also witness the digital launch of which is India's leading BFSI and Fintech companies 2021. Over the years, the publication has gained the reputation of being one of the most credible compendiums on the Indian BFSI sector. This year, it has also added a new dimension in the form of the Fintech companies. Now, this event would not be possible without our partners. So let me take the opportunity to thank them. Principal partner, Checkpoint Software Technologies Limited. Our technology partner, SUSE. Our life insurance partner, Life Insurance Corporation of India, LIC India. Our co-partners, Bank of Baroda and AU Small Finance Bank. And all our publication partners. At this juncture, I wish to inform our viewers that they are welcome to share their views and opinions on today's proceedings with us and on your social media channels. Please use the hashtags #DNBBFSI and #DNBFintech while posting. I'll repeat that, #DNBBFSI and #DNBFintech. So let's kickstart today's proceedings with our first speaker for the day. I would like to invite a leader par excellence to welcome you all on behalf of Dun & Bradstreet to the BFSI and Fintech Summit 2021. With over 3 decades of experience, he is an execution-focused leader, ladies and gentlemen, with a strong global background. Currently, he is responsible for Dun & Bradstreet's go-to-market strategy and business operations. Before joining Dun & Bradstreet, though, he worked with Rabo Equity Advisors as the managing director. He has also held various leadership positions in multiple global organizations such as Deloitte, HSBC, UBS, Barings, and Citibank. Ladies and gentlemen, please join me in welcoming our first esteemed speaker for the day, Mr. Avinash Gupta, Managing Director, India, Dun & Bradstreet.
Dr. Vivek Debroy, Chairman, Economic Advisory Council to the Prime Minister of India and President of the Indian Statistical Institute. Dr. Krishnamurthy Subramanian, Chief Economic Advisor to the Government of India. Mr. John Pham, Global Director Finance, FCI Global Practice, the World Bank. Mr. Rajnish Kumar, former Chairman, State Bank of India, esteemed guests featuring in the fire chat sessions and the panel discussion, our event partners, all distinguished guests, ladies and gentlemen. On behalf of Dun & Bradstreet, it gives me great pleasure to extend to you a very warm welcome and sincere thanks to all of you for having joined us today at this mega event, the Dun & Bradstreet Bfsi and Fintech Summit 2021. The summit is a platform that seeks to capture the pulse of the Indian financial services sector and to acknowledge the critical role played by Bfsi companies in the context of the Indian financial ecosystem. This summit, for the very first time, aims to highlight the growing influence of fintechs in the evolution of the Indian BFSI sector. The key highlights of today's events are a keynote address by several influential dignitaries, a power-packed panel session, and the release of the 13th edition of the Dun & Bradstreet publication, India's Leading BFSI and Fintech Companies. The publication is widely recognized as one of the most respected compendiums on the Indian BFSI sector and its various segments, including banks, NBFCs, financial institutions, broking houses, insurance companies, and asset management companies. This year's edition of the publication has added a new dimension by featuring another critical component of the financial ecosystem, the fintechs. The financial services sector thrives on trust, which in turn depends on a personal one-to-one interaction between the financial services provider and customers. Needless to say, the pandemic-induced social distancing norms, which were enforced for a major part of 2020 and continue in some shape or form even now, have certainly led to major implications for the sector. The obvious outcomes are the liquidity crunch, decline in credit growth, and deterioration in asset quality. However, there were also some silver linings that emerged. The crisis actually led to a major push towards digitization of the financial services space, especially around payments. It also led the BFSI sector towards a more long-term approach to digital transformation, both for the sake of operational resilience and also for better delivery of services to customers. The fintech sector has played a very critical role in enabling this smooth transition. With easily more than 500 million active internet users, India holds immense potential to become a digital economy in the very near future. It was the internet and mobile devices that kept Indians connected and transactional during the lockdown situation. As a matter of fact, digital transactions to the tune of about rupees 4,525 crores have already been executed between April 20 and beginning of March this year, as against a target of approximately 4,600 crores set for the entire year of FY21. This trend is likely to only scale newer heights going forward. Although initially it was necessity that drove motivated Indians to leverage digital technologies, now it is speed and convenience that is likely to keep them constantly engaged with digital technologies. Given these realities, an enduring partnership between BFSI companies and fintechs can only accelerate the penetration of financial services among the masses in the long term, if not in the very near future. Speaking of partnerships, our mission at Dun & Bradstreet is to grow the most valuable relationships in business by uncovering truth and the real meaning of data. We have what is perhaps the largest commercial database globally, with over 400 million company records derived from 30,000 data sources and with 5 million updates to this data happening daily. In the recent past, we've also added new age solutions such as compliance management, advanced analytics, and visualization solutions, master data management, and intelligent prospecting, among other services, to our vast array of services which we already offer to the business community. Since its beginnings in 1841, a very long time ago, Dun & Bradstreet has a proud heritage of providing such indispensable content to the financial and business community across the globe. But perhaps what is even more important than the data and content we provide is the trust that businesses have reposed in Dun & Bradstreet over the years. Coming back to the main highlights of today's proceedings, like me, I'm sure you are all eagerly awaiting to listen to our star speakers, Dr. Vivek Debroy, Dr. Krishnamurthy Subramanian. I'm also very keen to hear from Mr. Rajnish Kumar, who has been the chairman of State Bank of India and a very large client of Dun & Bradstreet over many decades, and Mr. Jean Fem on the Indian and global perspectives, respectively, on the Indian financial services landscape. Likewise, we are all looking forward to getting some valuable insights from the Power Pack panel discussion and fireside chat conversation sessions, which we have also got scheduled. Furthermore, we will also be witnessing the digital launch of the publication India's Leading Bfsi and Fintech Companies 2021. The publication is a well-respected compendium that provides listing and profiles of about 500 leading companies within the Indian BFSI sector, as well as 150 leading players in the Indian fintech space. These companies represent the very core of the Indian financial ecosystem. I would in fact term these businesses as the pillars and drivers of financial resilience and stability of the Indian economy, which are very critical to providing access to finance to every citizen of this country. I would like to congratulate all the companies being featured in the India's Leading BFSI and Fintech Companies 2021 publication. I wish all of you the very best for the future. Before I close, I wish to extend my gratitude to Dr. Vivek Debroy, Dr. Krishnamurthy Subramanian, Mr. Jean Fem, and Mr. Rajnish Kumar for having graced our event today. A big thank you to all our esteemed dignitaries and members of the panel discussion and fireside chat for coming together to help this event a very promising one in terms of insights to all of us. We also would like to thank all our event partners, the principal partner being Checkpoint Software Technologies Limited, the technology partner being SUSE, life insurance partner being Life Insurance Corporation of India, the co-partners being Bank of Baroda and AU Small Finance Bank, and of course, all the publication partners for partnering with us and coming together to make this grand virtual summit possible. And last but not least, I would like to thank each and every member of the audience for having shared the valuable time with us today at today's proceedings. I hope you all have a wonderful experience and have great takeaways at this summit. Thank you so much.
Thank you, Mr. Gupta. Our next speaker is a leader who has the responsibility of building resilient and transparent financial systems globally. As Global Director, Finance at the Finance Competitiveness and Innovation, FCI, Global Practice, Mr. Jean Fem leads the World Bank's work to promote sound, stable, sustainable, and inclusive financial systems. His global team of experts works with governments and partners to make financial systems more resilient. In his previous role, he has led the World Bank's Financial Stability and Integrity Global Team. He has extensive experience working on financial sector issues, notably in the Middle East and North Africa. Ladies and gentlemen, please join me in welcoming Mr. Jean Fem.
Hello, everyone. Thank you very much for inviting me to this exciting virtual event on banking, financial sector and insurance and fintech in India. I'm very pleased and honored to join you at the opening of the summit. As Global Director for Finance for the World Bank, I oversee our work on emerging market and developing economies on modernizing their financial sector to make them resilient, diverse, and inclusive, and to ensure they can support growth. These objectives are essential to achieving our broader twin goals of reducing poverty and increasing shared prosperity. Fintech has been transforming the way financial services are regulated and delivered. These changes present challenges and tremendous opportunities for regulators, policymakers, financial institutions, and consumers. In 2018, the World Bank and the International Monetary Fund launched the Bali Fintech Agenda, designed to provide guidance to policymakers, specifically on how to manage the risks and opportunities of fintech, while recognizing how fast fintech is evolving and transforming finance. We have therefore been watching fintech development in India very closely. There is much that other countries can learn from the India experience. Let me cite a couple of examples. India's experience with digital ID through the Aadhaar program has shown the power of digital ID to expand the reach of digital financial services. Access to traditional financial services is too often associated with extensive documentation for authentication. As many people lack proper identification, this prevents the poor from participating in the financial system. Aadhaar provides a simple identification method which complies with KYC requirements prior to opening a bank account. Further, it enabled opening an account instantly, as the verification and authentication were digital and could be conducted at agent's location. This reduced the cost of KYC from rupees 1,500 to around 20, which has allowed India to provide access to financial services to millions of additional customers since 2009. In parallel, India launched its Unified Payment Interface, UPI, in 2016. It provides a simple, interoperable payment interface that allows instant, around-the-clock payments. During the pandemic, the volume of UPI transactions increased by 76% between July 20 and January 21. By value, transaction process rose 99%. UPI seems to have helped customers maintain contactless payments and transact while observing social distancing protocols. And finally, in India, like in other jurisdictions, we have observed an acceleration of the uptake of DFS since the onset of the pandemic. For instance, more than 60% of businesses in India have either started or increased their use of fintech for making payments. And it's not just the formal sector where we have seen this transformation. In our work with some of India's women's self-help group, we found that the use of digital financial products by these informal entrepreneurs has increased by 75%, and the average number of digital financial transactions per month increased by 67%. The world of finance as we know it is rapidly shifting, and the pandemic has accelerated that shift. These transformations are compounded by global priorities like climate change, debt, trade dynamics, demand for jobs, and gender inequality. All these make it even more essential to boost the confidence between the general public, policymaker, and the private sector in many parts of the globe. This is why, as a community of international experts and institutions, we are redoubling our commitment to addressing the questions and gaps that will define the future and success of the fintech revolution. I would like to focus on three questions. Why are we excited about fintech? What are regulators currently doing in this space? And where should we be somewhat cautious or concerned? So first question, why are we excited about fintech and financial innovation? Fintech is everywhere, ranging from artificial intelligence to mobile application. There is evidence that fintechs bring efficiency and enables new products and services. It is a platform for new players that can operate more competitively in the interest of consumers, and it can facilitate a more diverse and deeper financial ecosystem. Let me give a couple of examples. Fintech applications bring changes in processes and business models along the financial services value chain, from the back office to the customer relationship. Likewise, advances in AI, digital identification, and cybersecurity, 4 of 2020, for sending $200 of cash is 6.5%, whereas the price to send the same amount of remittance through mobile operators is only 3.08. For very poor people, this reduction in cost means significant gains in money in their pockets. And finally, on this example, new algorithms and software applications are beginning to change how people borrow. Large volume of data collected by service providers can improve credit risk modeling and allow lending to new borrowers, including MSMEs. The pandemic has demonstrated the importance of digital financial inclusion. The use of DFS can reduce the need for physical contact when transacting, and it can also help government to quickly extend liquidity to firms and people most at risk. Government can use digital payment to improve the efficiency of social benefit transfers and salary payments and reduce opportunities for corruption. Digitalized merchant payments can contribute to broader digitalization of the economy. DFS are also a gateway for the poor and SMEs to participate in the formal economy. An estimated 1.7 billion adults in the world still do not have access to financial services. The poor and small businesses need affordable and tailored financial services that can cross geographical barriers. From the supply side, fintech-enabled automation of business processes can now make more low-value transactions commercially viable. We think there is more to come. Recent evidence of the impact of fintech as well as its potential going forward is very encouraging. The World Bank Index provide clear evidence that in many African and South Asian countries, mobile money and digital payments have improved access to transaction accounts for many adults who were previously unbanked. 2/3 of unbanked adults in the world have a mobile phone, and 42% of adults, roughly 1.85 billion adults, have internet access. Fintech has massive potential for future growth. All these are very inspiring and exciting developments. However, we must carefully monitor and mitigate risk. Let me name a few: competition, concentration, potential for winner-takes-all effects, regulation of big tech platform companies providing financial services. Data governance, data privacy, and cybersecurity must be addressed. And none of this is straightforward. Which leads me to my second question. What are regulators and supervisors currently doing in the fintech space? The key substantive challenges our client countries are struggling with are the following: consumer and investor protection, clarity and consistency of regulatory frameworks, potential for regulatory arbitrage and contagion, potential threats to financial integrity and AML/CFT issues. Moreover, the adaptation process of new technology may also pose transition challenges to market structure, buffers and resilience of incumbent institutions, and widen the divide between the haves and the have-nots. These are not theoretical issues. In Kenya, for instance, the Competition Authority recently imposed requirement on mobile financial service provider to disclose the borrowing cost of digital credit to consumers upfront, as well as the cost of mobile money payments prior to initiating and following each transaction. Throughout our operational and diagnostic work around the globe, we are learning more on how regulators are addressing some of these risks. Let me share some of our findings. A recent World Bank Global Survey revealed that the focus of regulators is on improving consumer awareness and education, and reviewing and amending the policy framework to enable fintech investment, innovation, and adoption. In addition, many regulators reported differentiated compliance requirements for fintech products and services targeted at the unbanked and underserved population, and such examples of such differentiation include entry of non-bank providers to offer payment services, creation of a new category of basic bank accounts, simplified requirements for specific products targeted at the unbanked and underserved segment, eKYC, and agent-based models. We're also seeing regulators and supervisors experimenting with new approaches to facilitate innovation while managing risk. In Mexico, Colombia, Indonesia, and Thailand, regulators have passed new laws and regulations to support fintech adoption and innovation while mitigating risk. Authorities have or are introducing more formal test and learn approaches called regulatory sandboxes to encourage experimentation with new technology, both for incumbent and new players. This group includes the UK, the US, Singapore, and Australia. At the bank, we are advising and supporting Indonesia, Mexico, Vietnam, Colombia, Jordan, and China in similar endeavors. We estimate that there are currently around 33 sandboxes around the world. In a similar vein, some regulators have established fintech innovation offices or hubs to promote information exchange with the market and reduce regulatory uncertainty. Finally, some regulators and financial institutions are adopting technology for regulatory purposes, so-called RegTech and SubTech. This has the potential to make compliance more cost-efficient, to improve risk oversight, and allow more sophisticated supervisory analysis. So that leads me to my third question: where should we be cautious and concerned? The deliberate and careful approach most regulators are taking is encouraging. My advice is that regulators and supervisors need to keep three things in mind. One, Our recent global survey suggests that monitoring of risk posed by fintech is increasing, but it remains largely confined to activities and entities within the traditional regulatory parameters. This focus on entities already regulated may introduce a bias, as the information collected may not capture the risk associated with new fintech development. In addition, information sharing on fintech between domestic and foreign regulators, as well as with the private sector, remains insufficient. Second, most regulators are not technology experts, so may not fully appreciate the risks of some fintech development, at a time where the fintech flourishes while institutional and resource constraints remain. Third, initiatives such as regulatory sandboxes can be complex to create and manage. They may inadvertently lead to picking winners. They also require stronger interagency coordination. Finally, however exciting they may be, they are also very resource intensive and should not distract from core supervisory function. Fintech markets are moving so fast that regulators need to adopt a nimble, humble, and responsive approach. This calls for striking the right balance between fostering innovation and mitigating risk to reap the undeniable benefit of fintech. Although maintaining financial stability and resilience is a regulator's primary objective, many regulators, particularly in World Bank Group client countries, have also market development, competition, and financial inclusion objectives. Overly cautious or inflexible regulation may constrain the responsible expansion of fintech. Without the proper regulatory framework, innovation may be stifled and even lead to financial exclusion. Regulators thus have a responsibility to adopt and ensure that innovation occurs in a responsible and sustainable way, and ensure they serve the customer better. In practice, we see that regulators struggle to strike the proper balance. In that context, demand for World Bank Group advice and support is very significant. We have integrated fintech in all our operations, and our objective is to provide the best and cutting-edge support to our client to have them strike that right balance along 4 thematic areas: legal and regulatory framework, financial infrastructure, including digital identification, faster payment, access to transaction account and financial services, and institutional strengthening to support the establishment of dedicated fintech unit. At the same time, IFC, our sister organization, is also investing in fintech company. They work with existing bank and clients to have them adopt digital financial services. The IFC, in collaboration with the Monetary Authority of Singapore and ASEAN Banker Association, for instance, established the ASEAN Fintech Financial Innovation Network, AFIN, which provide a technology sandbox for financial service providers and regulators to explore and test new technology and solutions. Fintech is with us and already brought many benefits. We need to keep open eye and vigilance on the risk without being overly conservative. Let's work together to ensure that the fintech revolution benefits customers, notably the poor and vulnerable, and improve the capacity of finance to support private sector development, job creation, and inclusion. Many thanks again for allowing me to join you virtually today. I wish you a very productive summit. Thank you.
Thank you, Mr. Pem, for your brilliant insights. Our next guest speaker, ladies and gentlemen, is someone who till recently had been at the helm of affairs at India's largest public sector bank, the State Bank of India. He comes with a rich banking experience of 40 years. During his tenure, he steered SBI towards becoming more resilient to absorb asset quality shocks. He oversaw the completion of the mega merger of 7 banks with SBI and the transformation of public sector lender into an all-rounded, digitally savvy bank. After retiring at SBI last October, he has recently taken up an advisory role at Baring Private Equity Partners India. Ladies and gentlemen, it is my pleasure to welcome Mr. Rajnish Kumar, former chairman, State Bank of India.
Hello everyone. At the very outset, I would like to thank Dun & Bradstreet for having invited me for this event and for giving me the privilege to share the dais with such eminent dignitaries and esteemed panelists. All of us know we are living in an age where technology is transforming every aspect of our life. The way we live, we work, or we play. New age technology has brought about a paradigm shift in consumer preferences and the way they interact and engage with services or good providers. The banking and financial services segment has been no exception and has seen maximum innovation. Over the last decade, we have seen tremendous transformation within the banking and financial services segment. The advent of next-gen technologies has ushered in a new era of tech-savvy players and disrupted the very structure of business models within the industry. Technology innovations like blockchain, artificial intelligence, machine learning, peer-to-peer lending, equity crowdfunding, and mobile payment systems are revolutionizing the way products and services are being delivered and have in many ways helped in reaching out to once unreachable locations and consumer segments. However, fintech is not just about a few nimble players or startups, although they are the key focus today. It is about how technology is transforming the entire financial ecosystem. While on one hand, the revolution set up by the fintech players has created new business opportunities, it has also brought to the fore various new challenges. Yet, the mantra remains the same. Only the fittest will survive and evolve. The ones that stick to the old habits and refuse to change with the times are the ones that will eventually fall out of the race. I have absolutely no doubt about it. The writing on the wall is very, very clear. Institutions and banks that do not invest enough in digital technologies will not be able to survive in the long run. The survival of those lagging behind the curve in digital shift is extremely difficult. We have observed this in recent times, post-demonetization, when digital transactions have even outweighed ATM transactions. Without a robust digital architecture and technology in place, it would have been difficult for the country's financial services sector to have served such a huge population. In COVID-19 scenario, millions and millions of transactions, the banks on the riding on the wave of technology and the technology infrastructure they created were able to transfer even small amounts of money in a very efficient manner. And this trend is likely to continue, there is no doubt again, and it's the new norm, and especially COVID-19 situation has in a way reinforced the importance of the technology in our day-to-day lives. Going forward, it is the internet and the mobile. In fact, the trend is, and one of the banks, they were sharing some information with me, that the number of mobile banking transactions done on their platform, it is now exceeding the transactions done on the internet banking. And post-demonetization, after almost 4 years, the number of transactions on the ATMs has gone down. In fact, if I look at the published figures of State Bank of India, the ATM transactions have come down to just 30%, and mobile and internet banking has gone to 55%. And the mobile usage and internet penetration across the country is increasing. Mobile applications are fast growing popularity among users. And while tech players like Google, WhatsApp, Facebook are transforming the way in which banking transactions of even a small value are being done, however, it does not mean that physical presence of banks would become irrelevant. That is not true. For a country like India, where the market segments are very diversified, the levels of income, literacy that differs, and the coexistence of digital and physical channels would remain in a country like India, unlike many Western worlds. But I have absolutely no doubt in my mind that it will be the digital which will be more dominant than physical, and the roles will also change. The distribution of products and services The origination will help on digital channels, and the after-sales service and hand-holding that will happen at branches. So unlike what we see today, when most of the business gets originated in branches, I think in coming years that is going to be turned up on its head, and digital would be the main channel. And coming back to today's topic, to the fintechs and the role they are playing, it is absolutely very crucial. But having said that, banks, as I was mentioning, have an equally important role to play. Banks should stop viewing them as fintechs as competitive or disruptive forces. The ideal situation would be that banks and fintech players join forces. Many banks have already taken a head start in this regard. The State Bank of India is one example, because I come from that bank. I can share that State Bank has a very, in fact, a very sound strategy to collaborate with the fintechs as well as procurement of their products and services. The technology, of course, it possesses certain inherent advantages owing to their size, scale, consumer base, and the trustworthiness they enjoy being in business for years. So the collaborative approach, where the fintechs, they come up with the new ideas, and the banks, they already have a customer base and the trust of the customers. When they collaborate, we can create a win-win situation. And nothing comes without its own disadvantages or risks. And when the adoption of technology is happening on such a fast pace, the real challenge comes on the data security and cyber security. Fintech companies have scarcer resources to spend on security and other regulatory requirements. So it is imperative for both and fintech players to find a way forward that allows the technological innovation without compromising security. And this would include building robust systems to safeguard data and other IT assets, ensuring they have the same security standards applicable to their cloud systems, and also leveraging machine learning and automation to enable early detection and prevention of attacks in real time. So innovation is happening both sides, the miscreants and as well as the people who have to defend. On this note, I would like to conclude by thanking each and every one of you for having patiently listened to my views. I hope I was able to bring out the role of fintechs as well as the role of the banking system and the way technology is evolving. This topic, of course, is very interesting, and I'm sure that all this seminar attended by Dun & Bradstreet, the participants will find it very useful. And I once again thank Dun & Bradstreet for inviting me to this event. Thank you very much for listening patiently to me.
Thank you, Mr. Rajnish Kumar, for sharing your valuable insights with us. Ladies and gentlemen, we now welcome an eminent speaker. As Chief Economic Advisor to the Government of India, he advocates ethical wealth creation through a marriage of the invisible hand of the market with the hand of trust. His idea of thalinomics, what a common person pays for a vegetarian or a non-vegetarian thali, has been acclaimed as the Indian Big Mac Index. The 2019 Economic Survey laid out the strategic blueprint for India to become a US $5 trillion economy by generating a virtuous cycle where private investment, wage and employment growth, and consumption feed into each other. His push for the behavioral economics of nudge has become acknowledged for its potential to bring behavioral change in India. The slew of reforms implemented in the COVID economic package draw on key reform ideas advocated by him. Ladies and gentlemen, it is my honor and a privilege to welcome Dr. Krishnamurthy Subramanian.
Welcome to all of you to the Bfsi and Fintech Summit organized by Dun & Bradstreet. As all of you would have taken note of, this year's budget has made a significant push towards reforming the financial sector and adding vitality to it, be it the privatization of a couple of public sector banks or the cleanup of the bank balance sheets through the structuring of a bad bank, or the creation of development financial institution in the public sector and enabling of the same in the private sector. So clearly the BFSI sector is extremely important for the nation's economic growth. And in this context, the role of fintech, of course, cannot be overemphasized. Last year's economic survey, when we had written this chapter on the golden jubilee of bank nationalization, we had highlighted the key role that fintech can play in the fostering growth of the banking sector in India. I think a few facts from that chapter are worth recalling. If we look at the size of the Indian banking sector and compare it to the size of the Indian economy, the Indian banking sector is still very, very small. I'll lay out a few facts. While India is the 5th largest economy in the world, if we look at the size of the financial sector, the largest Indian financial institution, which is the State Bank of India, is ranked 55th in the world, and it is the only one that appears in the top 100 institutions across the world. Countries that are a fraction our size, 1/6 or 1/8 our size, like Sweden, Singapore, etc., have multiples of the number of financial institutions in the global top 100. So that's one aspect. Secondly, if you look at the penetration of credit in the country compared to even many peer economies, the overall private credit to GDP ratio in India is about 50%, with areas like the Northeast having less than 10% of GDP as credit penetration. In contrast, if you look at the OECD average, it's about 160%. So that's another important statistic. So there are some sections in the country, like the Northeast, where the penetration is about 1/16 of what is the average in the advanced economies. Even if we compare many of the peer economies, we still are a significantly underpenetrated country in terms of credit. Now those are some of the metrics on the quantity side. If you look at on the quality, periodically we have the same problem of quality of bank loans, especially on the large loans, large corporate loans, where we have phenomena of willful default, and willful defaulters continuing to get loans, continuing to profit at the expense of the depositor, taxpayer, and other stakeholders. So we have the financial sector in India has both a quantity and a quality problem, and here's where fintech can play a significant role in improving both the quantity and the quality of the financial intermediation in the country. For instance, if we look at a simple metric, and this is something which is very useful, the number of banks that were using, that were looking at data on how many other banks had lent to a corporate, or the use of data on the kind of collateral that a borrower has given. 3, 4, or maybe 5 years back, those numbers were very low, and so banks, were not using enough data to be able to resolve the problem of asymmetric information, which is at the heart of any banking transaction. So while the banks, especially public sector banks, are starting to invest in the in data architecture, I think we still have a long way to go in enabling the kind of data architecture that banks globally employ. When we compare, vis-a-vis the kind of data architecture and the kind of analytics that the leading banks globally employ, our banks, even the private sector banks, are way behind, and that's the first fact that the BFSI sector needs to acknowledge, because the improvement can only come from first acknowledging, how far we are compared to the global standards. For instance, if you look at even among private sector banks, many of them have really not figured out yet how to do large corporate lending without burning their, burning their fingers. So the overall use of data, analytics, fintech for robust and sustainable lending to large corporates is still an area where Indian banks need to really invest a lot in, and that's why fintech is extremely important. And I say this as someone who had the opportunity to work on neural networks back when I was doing my BTech dissertation, at IIT Kanpur. And so I've had the privilege of understanding the potential of data and analytics and, things like artificial intelligence. Neural networks, as you will all appreciate, is essentially a precursor to, was a precursor to artificial intelligence. So, of course, these are, there's still a long way before artificial intelligence, etc., gets used a lot more. But even simple things like, using data on how many other banks has a particular borrower borrowed from, what's the quality of collateral they've put in, is that collateral, has it been pledged to another bank, so is that collateral being pledged again, some such simple data like that is not collected, or for that matter data on related party transactions. If you look at the overall way in which willful default happens, related party transactions are a big conduit through which swindling of money through bank loans happens, and the data on that is still not very good. For instance, we had shown in the economic survey that when you compare willful defaulters vis-a-vis distressed defaulters, or willful defaulters vis-a-vis non-defaulters, the willful defaulters systematically disclose far less information on their related party transactions. Number one, use far more related party loans and such related party transactions, and also the promoter has far less skin in the game, in a willful defaulting company than in a non-defaulter or a distressed defaulter. These are simple data, that our banks, can and must use, which, at this stage, at this point, is still, work in progress. And in contrast, the global peers, some of the leading banks in the world are already using artificial intelligence, machine learning techniques to be able to really ascertain not only the ability to repay, but also the willingness to repay, which is oftentimes related to a lot of psychological and sort of moral factors. And banks are now using data to even ascertain many of these quote unquote qualitative factors to ascertain the willingness to repay. And so the importance of fintech, the importance of of data analytics in this sector, I cannot emphasize it enough. I think over the last 2 or 3 decades, our banking sector has really lagged behind global peers in adopting these important technologies. But I think the time now has come for the banking sector, the BFSI sector, to really embrace these important technologies. And I think one key aspect for boards of BFSI companies to actually mull over is to get a lot more technology experts. Typically, the financial sector has been in India has been dominated a lot more by chartered accountants, and they have a very important role to play. They need to be there. But I think given the way in which banking is shaping up, it is extremely important for technology experts and and even better, people who actually have both a technology and banking background to be not only part of boards, but also be part of senior management. I think this is an area which the banking sector and the BFSI sector in general needs to invest in, so that the understanding of the potential of technology is really there among the boards and the senior management. And I think one cannot emphasize that enough. So overall, I think the opportunities in the BFSI sector, in the use of fintech, in the use of, and laying out the foundation for fintech is enormous. I hope that the participants in this conference will really learn about the opportunities that there are for applying fintech and go back to their particular companies and really apply these, because the opportunity is just enormous. I think one key input that I would encourage the participants to think about is sometimes we need to unlearn things in order to learn. So those who actually have not been as exposed to the benefits of technology may need to unlearn some aspects, and so that they can actually create the space for the benefits of technology to be learned. And I hope that participants will really utilize this opportunity to unlearn necessary stuff and learn similarly important stuff in this area. I wish the conference spectacular success, and I hope that everybody benefits from this conference a lot. Thank you very much.
Thank you for your great insights, Dr. Subramanian. We now welcome our chief guest. He is the chairman of the Economic Advisory Council to the Prime Minister and President, Indian Statistical Institute. He is an alumnus of the Presidency College, Kolkata, the Delhi School of Economics, and Trinity College, Cambridge. He has authored, edited several books, papers, and popular articles, and has also been a contributing editor with several newspapers. He has been a recipient of the Padma Shri, the fourth highest civilian award of India in 2015, and D.Litt honoris causa in 2018. He has also received several other awards, including the Shri Ram Sanlam Award for Financial Journalism in 2013 and Lifetime Achievement Award by US-India Business Summit. Ladies and gentlemen, please put your hands together and welcome Dr. Vivek Debroy.
Thank you. It's always a pleasure to attend a Dun & Bradstreet program, particularly the BFSI and Fintech Summit. I've attended such Dun & Bradstreet programs in the past. Those took place under happier circumstances. The COVID numbers in India may have eased, but there's still a lot of uncertainty. There is an uncertainty about whether the virus will mutate. There is uncertainty about the efficacy of the vaccination program, although the Indian vaccination numbers are quite remarkable. More importantly, COVID, which has affected not just India, it has affected all countries around the world, has imparted a certain degree of economic uncertainty. And this particular summit is occurring in the midst of this economic uncertainty, and it is important not to lose sight of the fact. The economic growth numbers in 2021-22 are optimistic numbers. Whether they are numbers that come from within the government, whether they are numbers that come from outside the government. So there is a fairly robust revival story across the board in various sectors. There are some sectors, particularly sectors which are distinguished, which are characterized by a human-to-human interface, which are still suffering, and they will continue to suffer for a while. And examples of those sectors are things like tourism, travels, to a certain extent civil aviation also. So let's not forget that. And let's also remember that economic growth does not automatically mean that the labor market, which has several layers in it, has automatically revived. There are going to be time lags. Having said that, the 2021-22 numbers are good, are expected to be good. The budget, in my view, has been somewhat pessimistic, understated the prospects of nominal GDP growth in 2021-22. I suspect the nominal GDP growth in 21-22 will be higher, marginally higher than what the recent budget has projected, and will probably approach 15%. Now think for a while what that 15% means. That 15% means that on an average, corporate profitability will probably be about 22%. Corporate profitability, average corporate profitability of 22% is phenomenal. However, the capital market will be associated with a significant amount of volatility. 21-22 will have good numbers because the base that suffered as a result of COVID was a low base in 2020-21. So what is important for us to ponder about and what is important for us to ask is not what is going to happen in 21-22, but to ask what is going to happen from 22-23. Obviously in 22-23, the numbers aren't going to be that spectacular. But in nominal growth terms, once the effects of the low base are out of the way, even in 22-23, we will probably get a nominal GDP growth rate of around 11%, which again means average corporate profitability of 17 to 18%. There is one point I'd like to make though. The financial sector is not decoupled from the real sector. The growth in the financial sector has to be proportionate to growth in the real sector. The growth in the financial sector cannot be completely de-linked from growth in the real sector. And the reason I'm mentioning this is it is possible to argue, and very convincingly argue, that one of the problems that had occurred in the last decade or so, in the last 15 years or so, contributing in fact to the generation of NPAs was the fact that the growth in the financial sector was completely out of sync with the growth in the real sector. Where does growth in the real sector come from? Growth in the real sector can come from only 4 different sources: consumption, investment, government expenditure, and net exports. For reasons I do not need to get into, the net export scenario as a driver for growth is not very rosy. There is protectionism, WTO is in a limbo, there is a lot of uncertainty surrounding growth in the external sector. So the real sector growth has to primarily come about through consumption, investments, and government expenditure. I think the recent budget should be looked at in this context. Because the budget drives reforms on all 3 counts: consumption, investment, and government expenditure. All too often, historically, budgets have been associated with tinkering in the tax rates. One of the messages in this budget is a message that tax rates will have stability. In any event, indirect tax rates are largely a function of what GST Council decides, but whether it is direct tax rates or whether it is indirect tax rates, there will be stability in rates. And this is particularly important because of fiscal compulsions. It would have been very tempting to hike direct tax rates, such as through a health cess or a COVID cess. The government has rightly refrained from doing it. And let us recognize that fiscal policy cannot be dealing from monetary policy, and monetary policy cannot be dealing from what is happening. I'm using the word capital markets now, not in the loose sense that it is normally used, but the sense in which economists use it. The budget also clearly emphasizes fiscal consolidation, important for capital markets, important for the fiscal sector. It emphasizes investments not in revenue expenditure, but in capital expenditure, particularly and it emphasizes the role of the private sector. I said earlier that growth in the financial sector cannot be disproportionate to growth in the real sector. That should not be interpreted as a statement of despondency, because there is a deepening of financial markets that needs to occur, facilitated by increasing digitization, and penetration of financial products in India is still low, and because of that, because of the India will continue to have one of the fastest growing fintech markets in the world. In the broad capital market scenario, the way I'm interpreting it in the sense of an economist, reforms are about competition. Competition requires entry, it also requires exit of capital. And when we are talking about NPAs, there is a stock of NPAs and there is a flow of NPAs. And these are two different sets of problems, although they are linked. They're linked because the existing stock is a result, is a consequence of the earlier flows. I emphasize the exit of capital. So therefore, NPAs are all the exit of capital, which for the first time since the reform started in 1991, started to happen through the insolvency and the bankruptcy code. There are improvements that have to be done both in the insolvency and bankruptcy code and in the NCLT process, more the latter, less the former, minor changes in that. But the NCLT process has to be improved because resolution of NPAs also requires efficient functioning of the NCLT process. For the existing stock of NPAs, existing stock, there are several things that have been mentioned in the budget speech, in the economic survey, which are being done. They are in the nature of asset reconstruction companies, an asset quality review of banks, the bad bank idea, recapitalization of banks. All of these are processes to handle the stock of existing NPAs. But as I said, it's not just about the existing NPAs, it is also about the prevention of future NPAs, which means that one has to address systemic problems in the system. What are the systemic problems? Well, one of the questions we need to ask in the first flush of reforms, we thought there was no need for DFIs. What was the need for a distinction between a commercial bank and a DFI? But commercial banks typically lack the expertise, the capacity, the mindset to handle medium-term or long-term projects, the financing of long-term and medium-term projects. Their mindsets are geared more towards working capital needs. So one issue is that of a DFI. A second issue is the consolidation and merger of public sector banks, which the government has already announced. A third element is privatization of public sector banks. Privatization of public sector banks is not the same thing as privatizing a public sector enterprise, because the public sector banks, they were nationalized under the Nationalization Acts. So therefore, privatization of public sector banks has to go through the legislative process in Parliament. But I think it is laudable that the government has decided to privatize a few public sector banks and has already identified a few. There is also the process of decision making in public sector banks, because some will be privatized, others will remain. They need to function in a competitive environment. So there are questions about the decision-making processes of public sector banks, the appointments of about lack of financial penetration. It also applies to MSMEs. MSMEs organized capital market, but from the informal market. I think one should also recognize that if one is talking about financial markets broadly, the budget has made some very, very significant announcements. Not just about disinvestment in LIC through the IPO route, but also hiking the FDI caps for insurance. The privatization of one of the general insurance companies. Financial markets are not silos. All of these reforms are linked to each other. And of course, the market reforms code. One of the questions that we need to debate, and which the government will no doubt debate and come up with announcements in the future, is the kind of regulator that we need. The capacity of the regulator. Do we need a multiplicity of regulators? Who will regulate NBFCs? And I just said that the market reforms code has been announced. But this is a moot question, because typically regulation occurs when there is no self-policing. In conclusion, despite uncertainty surrounding COVID, despite the exceptional circumstances under which I'm delivering this talk, I think the worst of the crisis, COVID-wise, economic activity-wise, is over. We can look forward with some optimism for the economy in general, for the fintech sector in particular, and I thank you once again, Dun & Bradstreet, for having invited me on this particular occasion. Thank you.
Thank you for sharing your views with us, Dr. Debroy. Ladies and gentlemen, today, of course, is a celebration of the achievements of the Indian BFSI and fintech sectors. Keeping in mind these sectors' pivotal role in the financial services landscape of India, Dun & Bradstreet, the leading global provider of B2B data, insights, and AI-driven platforms, is pleased to announce the launch of the publication India's Leading BFSI and Fintech Companies 2021. Besides profiling the leading players in the Indian BFSI and fintech sectors, the publication also features the views of their top management and captures the trends in the Indian BFSI sector. I request our guests for today to please join us in the grand digital launch of this publication. Ladies and gentlemen, India's Leading BFSI and Fintech Companies 2021. Thank you all for being a part of this digital launch. We now move on to the next section of the summit, the Fireside Chat sessions. The first of the two Fireside Chat sessions we have lined up for you today is with the Managing Director of India's first standalone health insurance provider, Star Health and Allied Insurance Company Limited. Here representing Star Health and Allied Insurance Company is the Managing Director, Dr. Prakash Subbarayan. Dr. Prakash Subbarayan has 2 decades of clinical experience within India as well as overseas. He heads the product innovations in Star Health by introducing exclusive health policies for senior citizens. He has played a key role in implementing mass health insurance schemes like the Shri in Andhra Pradesh and the Chief Minister's health insurance scheme for life-threatening ailments in Tamil Nadu. Ms. Naina Acharya, Leader Operations, Learning and Economic Insights Group at Dun & Bradstreet, will be anchoring this chat. Please welcome Dr. Prakash Subbarayan and Ms. Naina Acharya.
Hello, ladies and gentlemen. We welcome you to the BFSI and Fintech event 2021 hosted by Dun & Bradstreet. Thank you so much for taking time out. I would like to specifically introduce a very key dignitary today who has got immense experience in the insurance segment and at the same time is ready to share a lot of insights through this fireside chat. Let's put our hands together to welcome Dr. S. Prakash, Managing Director, Star Health and Allied Insurance Company Limited. Hello, sir. Welcome, and thank you so much for taking time out.
Hello.
So in this fireside, so in this fireside chat, so what we're trying to do is just arrive at a couple of, thoughts and trends which are key drivers for the growth of the insurance sector in India. And my first question to you is very simple, sir. One is that, how have digital technologies helped you deliver, good insurance services in the current low contact landscape? Dr. Prakash.
Thank you. Digital technology was initially enabling insurance companies, but now we are glad to see that it is helping us to reach a fulfillment. So we are digital technology helping us to have customer touch points for both sales and service. So which is a very welcome thing for the customers. For the employees, we are able to have work from home concept using our own VPN technology, very secure VPN technology, and we have helped them to adapt to new cloud-based services. So overall, we are able to establish business continuity through this.
Excellent. Yeah. Fantastic, sir. So then now, if you look at the current age digital technologies, which are quite imperative for the growth and the survival of any business, has your company taken any specific steps to make sure that you harness the digital culture as well as leverage the technologies that are available in the market?
See, for example, from physical offices, we have moved into virtual offices, where this is doing a lot of sales enablement and a lot of traction on the website. We have modified our website and we have created a mobile app, and this is helping us a lot in our growth and digital adoption from the service front and from the customer sales front. So we have also devised some portal which are very customer friendly, mobile apps and portals. Apart from that, with the hospitals, we designed the policy, but when it comes to delivery of services, we depend on the hospitals. So it is not that we adapt digitally and we improve on technology. We have to ensure that hospitals also build up their technology platform so that there will be no design delivery mismatch. So to that extent, we have created specific portals to work between insurance company, our Star Insurance Company and the hospitals. And this is helping in the transaction between the payer and provider. And for the customer, it is a hassle-free service and immediate fast approval and less query, less questions, and more comforts.
Absolutely, Dr. Prakash, because everybody wants everything, at the click of a button. So I guess it's more important to be where the customers are and create that kind of digital culture, which is, of course, driven by their needs. So I absolutely agree with you. And last but not the least question, Dr. Prakash, is that, fintechs have revolutionized the way the entire BFSI sector is being perceived right now. And it is said that they will keep on influencing and at the same time create that kind of disruption that nobody has seen before. So it's a tussle between the revolution or the evolution of the BFSI segment. Now, specifically with respect to the insurance sector, sir, have you partnered with any fintech companies in order to accelerate your business growth? And if at all you have, could you highlight on the key successful partnerships between the fintechs and your and your company?
That's a good question, whether it is a revolution or an evolution. But both these things, at this point of time, there's a lot of education that is required, because it is not the strongest or the wildest of the species that survives. It is those that are adaptable to changes. That is what we have learned during this pandemic. And during this phase, we have brought in a lot of innovations and releases and associations with fintech. But most important is it is happening in a rapid phase, because rapid innovation, rapid release from the IT department, and rapid changes in the business outcome. That is what is expected today. Before, we used to think about a strategy or innovation and we give our own sweet time for the technology people to come up with a solution. But now this is the era of rapid, bringing in rapid outcome, business outcome. So fintech, I think we have our corporate agents, some of the fintech companies. Insurance sales is largely agent dependent and agent driven. Over a period of time, this is an era of transformation where fintech has got a lot of role, and there are a lot of corporate agents who are trying to do their best to contribute to the insurance penetration, and we see a good metamorphosis in that. And payment gateways also, to facilitate the customers. We have a lot of payment gateways. Recently, we have 2-3 people with different payment gateways, and we see a lot of transactions happening through this gateway. Almost a collection of money, transportation of money, all these things are minimized and brought into digital means. And most important of all, some of the insurtech companies, which have a huge customer base, they are partnering with us.
Oh, okay.
And these insurtech companies are able to cross-sell our products to their customers.
Okay. Fantastic. Fantastic. So if you can see, the ecosystem is kind of growing because of the inculcation of fintech companies, and it is helping the industry grow nonetheless. So can you
rightly say, this evolution is creating a revolution in the ecosystem.
Right. So could you just pinpoint 3 trends that the insurance sector needs to watch out for moving forward? 3 trends.
Moving forward, insurance operations should happen more digitally and should ensure customer satisfaction. See, whatever technology platforms that we are building, end of the day, the proof of putting is in eating. End of the day, what customer expects is a hassle-free services and a promises that are fulfilled. An online sale makes a person better understand the product norms, policy norms and conditions, and it lessens a disappointment that can happen at the time of utilizing these services. So naturally, digital means of promoting sales and digital means of enhancing customer experience, all these things will increase the trust and confidence of the public on the insurance concept. And this can essentially help in insurance penetration.
Perfect. Thank you so very much for your time, Dr. Prakash. These are insightful insights. These are insightful information and knowledge that will help us kind of bring and create a more robust BFSI segment, and of course, needless to say, an insurance segment in India. Thank you so very much for your time, Dr. Prakash. Truly appreciate it.
Yeah, very nice interacting with you. Thank you.
Thank you, sir. Thank you.
Bye-bye.
Thank you, Dr. Prakash Subramanian and Ms. Naina Acharya, for the very engaging and insightful conversation. We now move on to the next fireside chat. This one is with the Chief Digital Officer of India's largest bank, the State Bank of India. Shri Ravindra Pandey is Deputy Managing Director Strategy and Chief Digital Officer at State Bank of India. He brings more than 3 decades of experience in assignments with deep domain expertise, extensive knowledge, and leadership experience in digital transformation. Digital strategy, payment solutions, retail, SME, corporate, international banking, and credit. As the head of the digital banking vertical of State Bank of India, he leads the digital transformation journey, technology-driven initiatives, and key business initiatives from conceptualization to successful implementation. He's also responsible for driving and maintaining SBI's market leadership across major technology-driven platforms to process retail and bulk transactions requirements of individuals, corporates, and government departments. Ms. Naina Acharya, once again, Operations Lead LEIG at Dun & Bradstreet, will be anchoring this chat. Please join me in welcoming Mr. Ravindra Pandey and Ms. Naina Acharya.
Hello, ladies and gentlemen. This is a very interesting leg of the BFSI and Fintech Summit 2021, which is a fireside chat. And needless to say, today here, we have a very interesting personality with us who is a part of a very respected institution of India, that is the State Bank of India. And with us today, we have an individual with 35 years of experience across the length and breadth of the banking sector. And he is the person who we look forward to share a lot of insights in the banking sector. Let's put our hands together for none other than Mr. Ravindra Pandey, Deputy Managing Director, Strategy and Chief Digital Officer, State Bank of India. Welcome, sir.
Thank you very much.
And so my first question to you, Mr. Pandey, is that, with over 35 years of experience as a banker in areas ranging from corporate credit, loan syndication, retail banking, SME lending, NPA management, and digital payment, among many others, how would you summarize the evolution of banking in India over these years?
It's very difficult for me to summarize the 35 years of journey, which started with the laser journey to, I put it from the laser to keyboard, keyboard to mouse, mouse to artificial intelligence. That's the journey in banking. But besides that, there are 4 and 5 key fundamental issues which has really transformed. One size fit all approach, which was earlier.
Okay.
Second, most of the customers have plenty of choices and they have means to get informed about the financial project at the click of the button, which was not available earlier. Third basic change is banks are now competing with non-bank entities, which was not thought of maybe even 10 years back. Bank was a domain totally perverse to the bankers. If you recollect earlier, bankers means a pinstripe suit. Now the bankers are half shirt also. So that's a change. Now the fourth is the power of the artificial intelligence and the machine learning, which was not there at all earlier. Fifth is 24/7 by 365 availability of banking channels. That was that these all fundamental things have changed over a period of 35 years, and they have brought about the necessary change into the banking scenario also. How the bank have changed? The bank have changed from starting from competing with competition to collaborative and cooperative approach to meet the competition, to meet the customer demands. Second, branchless, contactless, and cashless. These three banking has been absorbed by us. Now the focus earlier was also customer first. Even from the time of the Mahatma Gandhi, customer is the God, is the most important customer. That was there. It was a statement. But to serve a customer with a total customer centricity, the digital evolution has played a very, very vital role in this regard. And fourth important point, and one more important point I would like to tell, is the digital footprints. Earlier, bankers do not have any footprint of the customer other than what they transact in their account. Even if they transact in the account, in the absence of the digitization, both the banking operations and also the customer behavior, it is very difficult for the banks to create a curated product for what they call is n equal to 1. One product which suits you may not suit to your next man, your neighbor also. So these are the basic fundamental evolution I have seen. And going forward, what I foresee is banking as a service, banking as a platform where the banks need to partner with the fintechs, needs to partner with the big techs, maybe need to collaborate among themselves to give a platform whereby the customers are able to transact frictionlessly.
Okay.
So that is why banking, I think, will move in future from a bank for a financial need, bank for your lifestyle need is required. I don't know, maybe after some time like Tata Steel, we may say we also do banking.
Well, that's something we all are anticipating. So, because believe me, it's considered more as a revolution than an evolution, especially for the banking sector. So, following this, so the second question that people would want to know, most of our audiences are interested in knowing, that in the 70s and 80s, the broad approach towards financial inclusion in India had a very low emphasis on individuals and households. A lot has changed since then, and in fact, it is probably only in the last decade or so that India has taken massive strides towards financial inclusion. How would you summarize the role of digital technologies in bringing out this particular change, sir?
This would not have been possible the way the financial inclusion has been done. SBI had itself 458 million customers, 154 million financial Jan Dhan accounts. Had GEM Trinity would not have come. Jan Dhan account,
yes,
Aadhaar, and the mobile penetration. So to say that the digital technology, how did it brought about a change, I think it's a very, very understatement. Actually, it is this digital technology we made possible, because any financial inclusion for any bank, for any commercial organization is possible if it is cost effective, is easy to reach, easy to access. And third, the customer also it will be easy for him to access also. You imagine 10 years back, I can open an account into the remotest corner of Nagaland, but he has to travel 20 kilometers for a bank account for opening. Will he travel? Will it become cost effective? No. Now, this digital technologies of these three fundamental blocks, which we call it in India stack, we are continuously growing, adding and adding and adding and adding. This is only the foundation stone which is creative financial inclusion in India. And now in State Bank of India, we wanted to be a digital financial inclusion. We have opened the account. They know what is banking. How can I digitally onboard them? So we have created certain apps whereby it is an asset-light acquiring infrastructure, UPI QR code, and the smartphone penetration. These all combination help us to create this infrastructure. And what is the use of this digital technology in a financial inclusion? Can I provide a curated, digitized product to my customer at the bottom of the pyramid? That's it. I give you one example. We have a mobile app known as Krishi. You only need one. Krishi is agriculture. We launched the KCC review through the mobile app in August 2020 during Corona period, during that COVID. Around 400,000 agriculture customers have reviewed their KCC account, means the limit is increased by 10 to 15% using their smartphone. So that's the use of digital financial inclusion. So this I will say in sum up. And now this financial inclusion, not only the government, the new fintechs, they are also supporting the physical inclusion by creating rails for payment infrastructure, by creating the security standards, and most important, digital literacy. And digital literacy does not come only a PowerPoint presentation on having a night meetings in the villages. It comes from the comfort of doing a transaction and comfort of knowing that my transaction will not fail. So if these two we are continuously go to provide, I'm sure that this financial inclusion is going to be a big inroad into the financially included accounts.
Fabulous. It's just amazing to just listen to you, because that's where we believe that there's a lot of promise in what can be achieved. Now, sir, let's talk about the elephant in the room. So it is the way these small fintech companies have been influencing the users, and I would say spoiling them by giving them all the comfort for anywhere, anytime services, and giving them easy access to money, cash, which is what is kind of revolutionizing the way people are perceiving the transactions moving forward. So in your mind, sir, how is the fintech sector helping to transform the financial services landscape in India? And is the transformation actually benefiting the BFSI sector as well as the end consumer? And if yes, then how is it happening?
Bank for a BFSI sector, and particularly for the banks, customer is the centricity. We have the firm belief that if a customer get benefited, if a customer has an advantage, we as a bankers automatically tend to gain. Whether this advantage is being provided by bank or by an entity which is non-bank. Now this fintech landscape, if you see, they are primarily into three areas: payment and remittances, process improvement, and customer engagement. It's not that fintech only talks of payment, they also talks of operational efficiency. They also talks of security, risk. So these are fundamental three areas: payment, remittance, process improvement, and the third is the customer engagement. Where fintechs, because of their agility, their nimbleness, and most important, out-of-box thinking, that has helped the BFSI sector to start thinking differently. And when we start thinking differently, we tend to cooperate with fintechs. So what we call, in fact, I would like to use the word, instead of bank and fintech integration, it is fintegration. When the product goes to the customer, for him it is a product. Whether the backbone it is being done by the fintech or by the bank, is least bothered. So going forward, bank and fintechs need to collaborate, because if we think that we are two parallel lines like a railway track, then it is not possible. We have to merge in a single line. We have to become a monorail. That's the concept, and I think both the fintechs and even the large fintechs, now I think I call them tech fins. In fact, they are technology doing financial services. There is one problem which as a bankers we can provide. The fintechs have an idea, they have a technical capability, but they do not have the customer data. They do not have a customer insight to massage their models. Until you massage your model, scrub your model, you don't know how it will actually behave into the market. Because in earlier, your response also, I told that most important in a digital penetration is security. Security, not that 32 bits encrypted, certify ISO 9000. Customer is not bothered for anything. He's just bothered, my transaction has not failed. If his transaction has not failed, even if it most unsecured, he is not bothered. So these are fundamental issues fintechs and banks need to sit together and try to do. And sometime, as a banker, I feel that fintechs can act as our last mile of connectivity also. Because it may not be cost effective, may not be physically possible for us to reach to every nook and corner of the country, may not be, we do not know the real problem at the particular micro segment, at the particular ecosystem, micro ecosystem. Now this fintech, the tech fins, they have this capability. So if as a banker we integrate with them, talk to them, collaborate and cooperate with them, I think we'll be able to serve. And we are the firm believer that the collaboration between the fintechs and the bank is going to benefit both. And the government, the RBI, they are all providing necessary infrastructure, the legislative and financial, to go for it.
Perfect, sir. You've given us two good words. You've coined two good words, fintegration and tech fins, which is a food for thought for many people out here. I'm sure there's a lot of takeaways for people who are listening to this. Now, so when we talk about, having an agile and flexible way of working, and considering that we are living in a hyper digital world, we are more prone to a couple of things like privacy, security, cyber attacks, etc. So could you please share some of, how to overcome some of these concerns so that most of the people who are associated with the banking sector can kind of prep for it?
If you're talking of privacy, security, and the cyber attacks, okay. Now, these are whenever we are on an evolution curve, Now we are in a digital evolution curve. Now the digital transactions are not done by financially also by not so literate people also. So therefore, issue of privacy, issue of security, and issue of cyber attack has to come into the play. If you see the Government of India initiative for the data localization, cross-border data transfer, they are all steps towards this direction. Now with the bank, we have a concept of data governance council. We have a concept of a chief data officer in the bank, whose only job is to ensure that the data of the customer, which we are not own is not right word, which the customer has given us in trust. That should not be told to anyone without his or her consent. So these are basically, if you see the privacy standards, the new GDPR where the European Union has come into this, they are all going to help in this regard. And finally, if you see this in the light of the new technologies, open banking API, blockchain, augmented reality, virtual reality, ultimately from where they will build? They are going to be built from a common data set only. You can't build any analytical model on thin air. No, you need to have some underlying data to test it. Now that is the responsibility of the bank, the regulators, and the government also to ensure that the customer data is not provided. I won't name. It's not proper for me to name. But you click one site one year, next day in another app, you will find an app for the related site. This is not. What happens when we grow into and become an advance into the digital literacy, into the digital evolution? How it's possible? I have gone to site A, sought for A thing, and site B, which is pure social media site. I got an ad for that. Then you become suspicious about your privacy.
Right.
And these type of short-term gains will not help the country in a larger perspective for a digitization. Going forward, even if you not do these type of short-term gains done on the pretext of customer convenience. See, as a banker, we define a customer convenience, what customer is desired, what customer need desire, or what customer has desired. I don't think that we have a right to tell the customer that, look, this is what you will desire or you should desire.
Right.
So I think there are very fine balances into this. As an ecosystem player, we all should work towards that. Customer optically, I repeat the word, optically should be confident that his confidentiality of the data, his confidentiality of the digital footprints over various areas are not being misused. Government has put the regulation, RBI has put the regulation, at least for State Bank of India, we have created the necessary infrastructure for it, a very robust risk management system, cyber security system, certified impanel, and there are a plethora of technology words I can use. I do not want to use it, but finally it should be there. Now even as a board of directors also they have to mandatory gone through the 2 days cyber security. So their awareness campaign is continuously being built in. But then both in terms of the real-time analytics, in terms of the real-time fraud management, they're all being built. But finally, optically, as an individual, if I am not a banker, I'm a common person, then how do I perceive that, look, my data is secured, what I'm doing into one platform is not to be known to another platform? Sometimes you can ask a question, how the hell he knows that I want this?
Right.
So that these are the issues which, being a practical banker, being a banker who's on the ground, these are issues with the questions people ask us. That is, I think, as an ecosystem player, we need to create a necessary optics.
Absolutely, sir. Well, sir, that's about it. So we did have a fabulous time having a conversation with you, Mr. Pandey. It was really amazing.
if you permit me one minute, see, in SBI, we had launched an app known as YONO, You Need One. It's a sort of a super app, and we have dovetail banking, financial superstore, and online marketplace also.
Okay.
We have tried to dovetail all things to get the customer ecosystem and create sort of a platform bank. So that wanted to let the audience through you know also that we are working on it in a fully secure, robust manner.
Absolutely, sir. I mean, needless to say, as I mentioned at the beginning, that SBI has always been a proof of concept for many banks across the globe, if I may put it that way, on how to kind of make sure that to achieve economies of scale and keep in mind all the other aspects and make a customer feel very empowered. So that is something that we all know and we acknowledge as well. Thank you very much, Mr. Pandey, for your valuable time and for the insights. It was very interesting talking to you, and I would personally love to give you a round of applause for kind of sharing these thoughts and making this a very interesting conversation. Thank you so very much, Mr. Pandey.
Thank you very much for having me with you. Thank you.
That was a conversation with several key takeaways and insights. Thank you so much, Mr. Pandey and Ms. Naina Acharya. And now, let's gain some expert insight on the future of financial services in digital India. Let's dive right into the conversation with experts on the much coveted topic of riding on the fintech wave, reimagining financial services in a digital India. Moderated by Dun & Bradstreet's Global Chief Economist, Dr. Arun Singh. Dr. Singh, a professional economist, has more than 15 years of macroeconomic research and analytics experience. His areas of work has spanned quantitative and qualitative economic research, econometric modeling, commodity research, and industry research across a wide spectrum of sectors. Broad areas covered under economic research and analytics include real sector, public finance, monetary and fiscal policy, external sector, infrastructure, social sector, country and company risk rating. Before his tenure in Dun & Bradstreet India, Dr. Singh was with Tata Group. He handled projects on in-depth analysis and research on various economic issues and was an expert in macroeconomic modeling, forecasting and demand assessment. Our esteemed panel for today includes Mr. Ramanathan Ramananda, Mission Director, Atal Innovation Mission and Additional Secretary, Niti Aayog. Mr. Ramanathan Ramananda is the Mission Director of the Atal Innovation Mission, Niti Aayog, Government of India. He has been instrumental in the launch and execution of several nationwide innovation and entrepreneurship initiatives, such as the setting of up over 10,000 plus Atal Tinkering Labs in schools nationwide, with over 6,700 plus having become operational across all districts and over 3.5 million students having gained access to innovative tools and technologies thus far. He was previously Managing Director and CEO of CMC Limited, a subsidiary of Tata Consultancy Services. Next up, Dr. N. Rajendran, Chief Executive Officer, Indian Financial Technology and Allied Services. Dr. N. Rajendran is a PhD in computer science and a leading expert in the field of payments and banking systems. He has been a facilitator and builder of world-class technologies with proven capability, including complex and diverse range of cost-effective payment systems. He was the chief architect in creating and implementing groundbreaking systems such as Unified Payments Interface. Through his previous role as Chief Technology Officer at NPCI, he has played a key role in helping transform India into a digitally empowered society and a knowledge economy. Next up, we have Mr. Vasant Sridhar, co-founder of Business.com. Mr. Vasant Sridhar is the Director and CSO, Chief Sales Officer at Off Business. Off Business is a fintech platform that goes beyond lending to provide procurement and marketing solutions to its customers. Before Off Business, Vasant worked at ITC Limited, Agri-Business Division, or also called as the ILTD. As a part of the CEO's office, he has led multiple assignments across business excellence and strategy. A certified Lean Six Sigma black belt, he has driven advanced analytics and process excellence projects. Our last panelist for the day is Mr. Ashish Tandon, Cloud Security Lead India, Checkpoint Software Technologies Limited. Mr. Ashish Tandon is a business development professional with a technical background and 19 years of experience across cloud, security, and digital transformation. In his current role, he leads the cloud security sales for Checkpoint across India and SAARC region. Ladies and gentlemen, please welcome all the esteemed members of our panel discussion.
Dear panelists and audience, it is my privilege to welcome you all to today's panel discussion. Today, we are going to discuss about one of the most apt and current subject is riding on the fintech wave, reimagining financial services in a digital India. We all know last few years, government has taken a conscious call towards the Digital India initiative, and that basically have taken many shapes, many structures, many format and many framework. We just today want to discuss about how this framework, how this structure is basically taking over and going to evolve and going to benefit a larger audience, not just the company itself, also about the entire economy as a whole. The fintech disruption is being felt across financial services industry and is exerting pressure on the traditional businesses model. If I have to talk about some of the examples, so new lending platforms are transforming credit evaluation, loan origination, and are opening up consumer lending to non-traditional sources of capital. The second example, the robo-advisors are improving accessibility to sophisticated financial management and creating margin pressures, forcing traditional advisors to evolve. There are many examples and there are many case studies one can talk about. There are 4 elements I just want to touch base, which basically happened in the last few years, and it's happening and is going to basically shape in the future, which will be basically a base or basis for our conversation today. The first one is a time and cost. Leveraging technology has helped the financial services sector in building an ecosystem that can profitably serve a low-ticket market that were previously unviable due to high cost and time. The second part of this is the data. The uptake of technology and novel processes has led to the rise in the strategic role of the data. If I have to talk about the data in the space of the financial services, financial services in fact have the natural advantage in the data world. The amount of data available to them per unit of revenue is unparalleled. If utilized well, this data can reveal the full financial genome of the customer, whether talk about individual or corporate. Now, the third piece is basically tech ecosystem. Given that India has developed a strong tech and analytics ecosystem that can support innovation, the time is for incumbents to partner with the fintech, and that's basically the time at this point of time. You cannot remain isolated. You have to basically be a part of the new and the future tech ecosystem, which are basically going to be created or created already. The fourth part is that the new market opportunity, which is basically talking about the future, the new market opportunity, the profitability gains, the proliferations of financial products, and broadening partnership and the participations of different sectors of the economy that's enabled by the fintech would lead to the reduction in the income inequality, creating efficiencies and the long-term economic growth for our country. That was the basically 4 key base for what we are talking about in the sense of the fintech and the BFSI and the role ahead. And in that context, we have a panel discussion, and we have esteemed guest and the panelists who is basically going to share our their thought process, their views, and the perspective toward this one. And in order to move ahead, I have my first speaker for the panel discussion, Mr. Ramanathan Ramananda. He is a mission director of Atal Innovation Mission and additional secretary Niti Aayog. So welcome on this panel discussion. And my first question is basically to you, is that we have seen what's happening in the what you call the fintech ecosystem and being into the one side of the equation to the government side of the equation and then what you call the policymaker side of the equation. India is basically, if you look at currently, among the top 2 countries globally in terms of the fintech startups. If you look at that development, if you look at those data in mind, where does India currently stand in terms of becoming a fintech superpower? Because I think we have traveled a good journey, and the Financial Services Mission Mode project is one of the great success for the government of India within the Digital India. Given that context, where does India stand in terms of becoming fintech as a superpower?
Thank you, Dr. Arun, for having me on the panel along with all the other distinguished panelists. And it's indeed a pleasure and privilege to be part of this very important deliberation on fintech, the opportunities for India and the global potential that we have. Indeed, we are living at a very important cusp in our history, in our growth. India is it is a watershed moment for India at this point in time, with a convergence of 3 very important things. One is a demographic dividend that we talk about, which is the envy of many a country. We are a very young country. We have more than 65% of our people under 35 years old. That not only represents a huge potential in terms of innovative capability and talent and workforce that we have, but it also represents a huge potential for the fintech market, because these people are across the country. We are a very large country with 1.3 billion people, as you are aware. We are also a country where our infrastructure is spread, and our country is spread across 715 districts, more than 4,800 small towns and cities, and 650,000 plus villages. Now, when you look at the fact that you have to service this, and this is one of the fastest growing economies of the world, barring the COVID-19 crisis. We have been growing at anywhere between 6 to 8%. And if based upon indicators and based upon the potential, we have the potential to grow at 8 to 10% over the next several years. But more importantly, the potential is also to harness affordable, accessible, available, and advanced technologies to be able to grow the country rapidly in multiple sectors. And if you want the country to grow in multiple sectors, fintech startups are going to play a very important role. Or in fact, for that matter, any startup would have to have an integrated fintech component if they want to service this entire market. Now, the government of India has had many initiatives which are actually going into us having the potential of being one of the fintech superpowers of the world. Whether we have reached there, no, we have not. But the potential fast in the next 10 years to become a fintech superpower in the world is very high. And why do I say this? First of all, if you look at the innovation ecosystem that the government has been creating and supporting, including the Untitled Innovation Mission, we are today a country with more than 50,000 startups. We have more than 400 incubators who are supporting these startups to succeed. Out of these, almost we have close to 2,000 fintech startups out of the 50,000 plus startups. We have close to 34 unicorns, and 11 unicorns have been born just during the COVID-19 time, which is, an amazing thing. When the rest of the world was still struggling, Indian startups were doing well, and 11 unicorns were born. So now the potential of these startups to address what the Honorable Prime Minister has in his clarion call of Atmanirbhar Bharat. He has said, if India has to develop into a self-reliant country, which can also service the rest of the world, is very important to leverage the pillars of demographic dividend, the pillar of infrastructure that we talk about, including digital infrastructure, the pillar of demand that we have from 1.3 billion people, the pillar of socio-economic progress, and the pillar of technology. So therefore, I think India is having all the perfect ingredient, a perfect convergence of a growing economy, a demographic dividend, affordable technology, and the fact that the Indian ITS industry has blossomed to be a $190 billion industry just in the last 10 years shows that we now have the potential to become a startup nation. So far, our growth was as a service in the service economy. ITS companies were servicing the rest of the world. But today we are having many startups and many innovative entrepreneurial organizations which are trying to address this burgeoning Indian market. And many international people are also doing that. And what is triggering this startup phenomenal growth is the jam trinity focus of the government. We have 1 billion Jandan accounts today. We have over 1 billion mobile phones, and we have 1 billion Aadhaar IDs. Now, this combination is enabling a slew of financial applications at the rural level, at the macro level, and for organizations who were able to bridge that huge gap that we had in a disruption of supply chain in India during the COVID-19 times. They were able to do it because of the mobile payments, because of supply chain management, better supply chain management using digital transformations. And this is now only going to increase exponentially in the years ahead. So we have a tremendous opportunity to become the fintech superpower of the world.
No, thank you. Thank you, Mr. Raman. I think you've summed up so well. Then I'm telling you because last many years there was basically the discussion happening that demographic dividend should be converted into demographic dividend. Otherwise, it will become a demographic disaster. And exactly, we are moving in the same direction. That the three things you mentioned about who's basically going to use our services, are basically who's basically going to drive economy in the future. There's basically a young population, and India is one of the first country I can say that who basically can successfully say that we have a young population. The second thing is that we have a history of entrepreneurship, and we have recent a couple of decades of good successful IT and ITS sectors. If I have to put together, I don't think so. There's another time we have to wait, and that's exactly we have right time. We have entrepreneurs in the country. We have a success story coming from IT sectors, and we have a good user who's going to drive. And I think we are looking at who's going to use the today's youth. They're not going to visit to the, let's say, for example, simple example, they're not going to visit to the banks physically to do their transaction. And in fact, they just want everything on the mobile, and that's exactly things happening, and that's a good development. With that, I think we are talking about the future, and we're talking about what we call the cashless economy. And that brings me to the second question to Dr. Rajendran. I'm coming to you, sir. And I have a second speaker today, Dr. N. Rajendran. He's a Chief Executive Officer of Indian Financial Technology and Allied Services. Sir, I have taken up a cue from Mr. Ramanan about the future and other things happening today. We have seen in the past from the government, and they are continuously taking many initiatives, many policy announced schemes there to make digital transactions. And one of the first choice, keeping the young population, keeping the what we call our demographic dividend in the mind. In fact, India is becoming or striving towards what we call the low cash economy. What do you think, what is basically your view of the future of money?
Thank you, Arun. And thanks, Sir Ramanan. Summarized the landscape of fintechs very nicely. And I just take it to some of the points from what Mr. Ramanan spoke. And we see the how we have the digital conversion in the country happen in terms of payments. It is an exponentially happened last 2-3 years. And for example, if you take the FASTag rolled out across the national highways, how much transformation done in that sector? It is not only saving the time, it is saving the money also. It is the, if you see the statistics, how it is when you started with the maybe 1/3, one road first start with one lane, second lane, third lane, and you get into the full lane of the FASTag. And the economic also, how the money getting figured and how much actual collection happened. The leakages of money is getting avoided. No money is unaccounted. It is completely coming to the system. And the Second thing, if we see the thing, the time and fuel saving is an enormous. If we say every toll, beautifully, Mr. that Atal Bihari Vajpayee, former Prime Minister, the road started, that infrastructure road started actually. Now, after making that road, and we had the tolls, and every 50 or 60 or 70 kilometers, and the people go and stand 15 to 20 minutes to spend on in the tolls. Then you see how much time people spending in the tolls, and also how much fuel is wasted during those times. So we see how the transformation helping saving the lot of money in terms of fuel consumption and in terms of time of the people, and it is you cannot even convert into an ROI those kind of the parameters. So it is the adoption. It is completely you are going away from the cash to the digital transactions, and that created a convenient and also saving the cost and also a good experience to the end customer. And the entire pandemic, if you see the things, many people even could not able to come out, but still they could able to buy their regular requirements of the basic needs or the essential items, just sitting at the home and just using their mobile, and they could able to order and they could able to get the essential goods on their doorstep. So this could happen because of the availability of the UPI platform. If you see, the UPI platform is one of the platform which is completely serviced the lot of the digital. Maybe you can take the e-commerce companies, all the companies uses the UPI platform, and that helped to deliver a lot of services there to their doorstep even in the pandemic period. So that itself, you see the things, people have completely gone from the cash-based transaction to the digital transactions, using only the mobile as both the customer end as well as even the merchant also started by using a mobile and started doing the services to the end customers. So these transformations, if you take the list, it will go a longer list. And if you take these are the things, and the feature looks more adoption in terms of the digital money, and even how it helps to even business also. And if you see even in the mid of the pandemic, and maybe the last December, after the RTGS become 24/7, now more business becomes an inclusive and in all the days. Now some of the transaction, when you see, if it is happen in the Friday evening, and the business have to wait for the Monday for large value transactions to RTGS to open. And now this RTGS 24/7 becomes the instrument which allowed the business to do in Saturdays, Sundays, and any time 24/7. Earlier it is only morning to evening. It becomes 24/7. For one example, which I heard through some of the friend circles, earlier the gold retailers normally goes to the RTGS value because high value transactions. They could not able to do it. If they do the cash transaction, there is a penalty for a cash transactions, because at least some 1 or 2% extra they need to pay. But if they do it on the RTGS, then it becomes they get some subsidy on some import duty or something like that. Later, I don't know exactly the value, but it encourages those business also now they could able to do it all the days and any time, because mostly this purchase will happen on Saturdays, Sundays, or evenings. So how these business entities are getting more comfort and adopting the digital transaction, that is also helps the nation to build how the economy and how the SMEs also can able to part of the mainstream in the digital transaction. That's what I'm just my point of view is definitely the adoption is going continuously, but we'll have in future we'll see more on digital money, and which is accepted across all the business segment.
No, rightly said, Dr. Rajendran, and take that word basically towards the end. What you basically said, that ecosystem has to be there, including MSME has to be a part of that piece. And with that, I would like to invite Mr. Vasant Sridhar of Btech. Mr. Vasant Sridhar is a co-founder of Btech Private Limited, in fact, of business.com. And I have another speaker today with us, Mr. Ashish Tandon. He is basically from the cloud security. He's a cloud security lead, India Checkpoint Software Technology Limited. But since you started conversation on MSME, and there's basically one concerns towards that, and I will come back to you, Mr. Vasant Sridhar, on that MSME piece. If you look at, we heard Dr. Mr. Ramanan talking about, Dr. Rajendran talking about this partnership of fintech and financial sector is not by accident. It's by choice. There's a well-crafted strategy and planning been basically put up, and there's many targets. One of the biggest target is the cost-effective financing, and we're talking about. In fact, at DNB, we have a 2-decade history and experience of talking to MSME community at the ground level. There are many problems they cite, and then 2 problems which they cite again and again is basically access to the credit and access to the market. And that's a reality, and that has not even changed. The biggest reason is that we are not able to validate their history, their credit information. There are many other stuff. There's a manual intervention happening, and I think there are many companies trying to resolve that problem. I think I can see one of you front-ending from that side, where they talk about the financing, talk about the working capital finance and things like that. As a technology-driven SME platform, we have talked about what kind of capabilities were you able to wield by combining technology with financial solutions?
Okay. Thank you, Dr. Arun Singh. I think it's a pleasure to be in this panel with such esteemed guests also in the panel. So we fundamentally believe that lending at the end of the day is in a way a commodity. There are great banks, there are great financial institutions, there are a lot of great people out there who are with strong experience in lending. And we believe that we need to do something more than lending if we need to have a strong association with customers. We believe that we need to combine lending with additional services, and I think that's the way we view this existing market of the way we approach to customers. So where we bring technology into the picture is that if you look at the SME ecosystem in India, there are 2 types of SMEs out there. One would be what we called the unbanked SMEs. These would be companies who are new, who are relatively less vintage. They don't have collateral, so they don't have large bank limits, right? This would be more the unbanked set of SMEs. And the reality is that if you look at India, they say that only 40% of an SME's requirement is met by formal banking. Today, the remaining 40% is met by, the remaining 60% is met by informal channels, which means literally every SME out there is probably not unbanked, but definitely underbanked, which means their access to capital is never enough to ask, what their requirements are. Now, there is a conventional way to both reach out to these customers. Some of them might be very small. So the cost of reaching out to a wide range of customers does not make sense for a large bank who would reach out to large limits. And at the same time, today, a bank would follow an existing set of evaluation criteria based on financials, based on ITR, right? The standard evaluation set. But we believe that there is a lot more when it comes to understanding and evaluating these SMEs. What we do is that we underwrite and work with them based on their commerce transactions. That's the differentiation we bring in. We believe that today, whether you are talking about any SME out there, they would be buying commodities, they'll be buying steel, they'll be buying aluminium, polymer, chemical, every raw material, which is today 60% of a SME's requirement. We use a lot of transactional data that we have on our platform where we supply material to them, use this over and above the existing banking parameters to underwrite and evaluate and reach out to SMEs. So we get a lot of operational data from our commerce platform, which we use to underwrite to SMEs. At the same time, if you're looking at generally the ecosystem today, right from today, vendors selling on Flipkart, vendors selling on Amazon, vendors selling on some of these largest e-commerce platforms, or even today a vendor selling, a small hotel unit, setting up shop on a Oyo or setting up something on a Tribo. The reality is that there is a lot of transactional data available. This transactional data goes beyond the conventional financial data that is out there. This transactional data gives you live real-time health of the SME because you're literally seeing what is happening with them on a daily basis. So you can reach out to a large, leverage a lot of this data to lend differently to SMEs, which today a conventional bank might be limited to because of the size, because of the ticket size they work with, etc., etc. So that's the way we view as lending. We work with a lot of operational data because we are part of their supply chain. We use that to lend to SMEs, which without just looking at them from the angle of financing. We also build a platform for reaching out. Now I'll tell you what, for example, what COVID has done. Today, an SME might definitely want finance, but when demand is lower and as the economy is reviving, they will definitely want to know more opportunities to grow their business. We have a platform where they reach out for growing their business. They know what government tenders are going, what BHEL tenders, NHAI tenders, PWD tenders. They literally know what government orders are. We provide that at a very concise model. And we tell them that, hey, you're reaching out to these tenders. You will definitely need finance to bid in these tenders. You would obviously need material to bid these tenders. We will provide these solutions too. While we have definitely seen a lot of fintech commerce transaction data happening on the B2C side, and we have seen the e-commerce logistics because of digital ecosystems coming in and transaction data coming in, to give more to the underbanked SMEs and give first time to the unbanked SMEs. And that's how we view the entire financing plus operational piece put together.
No, thank you, Mr. Vasant. I know you mentioned about the data, and that's what basically I was trying to talk about. One side, you have a data which basically you can use, do the analytics, do coding, you can do some of the modeling and arrive at a solution to the masses, which basically can be used for the betterment of the solution, so as at least you are increasing your reach. And the second side, that's basically the threat. And that's what basically each opportunity carries that there is a concern, there are a threat, there are a problem. Idea is that keep growing, keep innovating, at the same time keep some of the checks ready to ensure that what we call today is the threat coming from the fraud or some other stuff, and that's very prominent. That's what coming again and again every day. With that context, I'm reaching out to our next speaker, Mr. Ashish Tandon, and I said already that he's a cloud security lead India, Checkpoint Software Technology Limited. Mr. Tandon, now the context is that one has to safeguard us, and the idea is that why cyber security is critical. In fact, we talk about digital financial solutions are making customers' life easier, no doubt about that, and more convenient. And these solutions, if you talk about, depend heavily on cloud technology. What are the specific cloud related threats that fintechs need to be aware of in order to protect themselves, their customer, and their reputations? Because if they're not doing now, then the problem could be many, and we have some live cases, live experience in the recent, which I'm sure that we'll be touch basing on those aspects as well.
Absolutely. In fact, just taking from what the rest of the panelists have been saying, right? So I think we're in a very unique situation. I don't think any other country in the world can compare and say that we can teach India what to do, because from what Mr. Ramanan said, I think we are in a very unique situation of digital inclusion. There is so much growth happening because it's for the first time it's really opened up, right? And we are reaching we are reaching businesses, we are reaching consumers, which was never possible earlier. You could never pay for a cup of tea with your mobile phone. Today it's a reality. So this is, cloud is probably the only way to do this, because, the amount of scale that you need for doing this kind of transactions is becoming extremely difficult to do in-house. We've seen examples of how some of the largest, financial companies in the country have been pulled up to say that, look, you'll have to really improve your digital infrastructure. And fintechs come from the other side, right? They've been born in the cloud. They've always done this. They've never had a data center in their life. They've never run in-house IT centers. But I think we have the advantage of hindsight, because some of this digital transformation, not to the extent of what's happening in India, and let me just say that again, has happened in the Western world, and we have seen some of the challenges which have come up over there, right? So we've never had, touch wood, in India, a major financial institution that has, had a cyber attack when they were on cloud. But this has happened to other financial services companies, major banks, right, in the US. So we have the ability to learn from their mistakes, and there's no difference as far as security is concerned when it's related to cloud or it's your on-premise environments. It's just a different paradigm, right? You have to apply the same concepts, but the technology is such that you're going to change at a speed which you've never done before, right? So the amount at the pace at which fintech moves is forcing the larger financial services companies also to have what's called digital twinning. That's where they really partner with fintech companies. They are going out and creating these new models, and the fintechs also have to now come up to the same security standards as the banks have been following, because without that there's no other way out, right? We have to do that. So with cloud security, the three things that we at Checkpoint talk about, which I think is important for everybody, right? It doesn't matter which place you come from. It's really got to do with the scale at which you want to increase or decrease the amount of transactions you want to do. It's the speed at which you want to change. So we have to deal with applications, or we have to deal with new offers that are going out to the customers, like never before. It's sometimes even twice a day. Forget about 6 months. And the last thing is, it has got to be everywhere. So today, all of us have the advantage of being in what we call a multi-cloud world, right? So we are not tied to one cloud provider. How do fintechs and BFSI organizations maintain a homogeneous level of security across all of these cloud environments? So these are the considerations that you need to have in place. And the last thing that I would say is it's really going back to defining policies, right? We've always defined policies. How do you do that in the cloud world?
No, I think you're basically apt, and this is what exactly happening. And your advice is really well taken, Mr. Ashish, because that's the core. And I'm saying the opportunity is there. It's just you have to take care of the threat, and how that things we can take care of that. There are a couple of more stuff. I will come back to you. But I think I will go to Shri Ramanathan ji. You mentioned about young population demographic dividend, and that's valid, and that's what's happening today. I mean, we can claim to be one of the biggest nation to have that population. And as you said, and we basically you heard you saying that, talking about the government have taken a conscious effort, initiatives to tap that opportunity. Jam Trinity, I think that's one of the great initiatives taken, and Financial Services Mission Mode project being part of Digital India. So many things happen, and there is a need. One can use this workforce, this talent force, to better channelize toward the economic development. Now, If I have to look at the current and then past, where basically young population and then mobile penetration, and that's growing up, and the financial transaction through the mobile, and some of the speaker was mentioning that's going up. What kind of impact can digital financial ecosystem can have on India's overall economic growth? Because there's an economic theory behind that. Every X percentage increase in the financial ecosystem will have a Y percentage increase in the overall economic growth, either directly or indirectly. If I have to look at those channels, what those basically impact area, if you feel, could have on the India's economic growth story?
Yeah, thank you, Arun. And you see, like I mentioned earlier, India is having tremendous opportunity if it leverages its demographic dividend. But its demographic dividend is spread across 650,000 plus villages, more than 715 districts, and more than 4,000 small towns and cities. And we have only 8 tier 1 cities. So if you are thinking about having this advantage, then we have to empower them with the ability to become entrepreneurs and new job creators. India has to transition from a land of just job seekers to a nation of job creators. That means you have to create an ecosystem, a very vibrant financial ecosystem that enables 3 things. One, it provides access to capital and access to finance. Whether you are in a remote village or whether you are in a tier 2 city or a tier 3 city, in the hilly or coastal districts of the country, in the tribal districts of the country, or whether you are in a tier 1 city. So one is the access to capital. Second is access to resources. So for that, if you want resources, because if you want to create a product or you want to create an entrepreneurial unit, how do you ensure that these resources are made accessible to you through a digital supply chain? So a digital transformation that is happening in this country, whether it is leveraging AI, whether it is leveraging cloud, whether it is leveraging 5G technologies, satellite technologies, and so on and so forth, all of these transformations is going to enable a very vibrant digital supply chain, so that you are having immediate access to resources. And that's where when the Honorable Prime Minister says we have to improve the infrastructure, it is not just the physical infrastructure which has to become very smart in every city or every village or every district. You also have to make a very smart digital infrastructure so that you are able to extend your reach from the remotest village, from Sikkim to San Francisco, or from Salem to Seattle. How do you ensure that? And that is possible by leveraging digital technology and the cloud and all these technologies we are talking about. The third is risk management. Often in lending, and as Vasant had rightly pointed out, how do you ensure that you are able to lend to the budding entrepreneur? Because India is a country of a million challenges, but a million challenges are a million opportunities for entrepreneurs, whether it is in affordable housing, clean drinking water, sanitation, renewable energy, smart meters, smart hospitals, smart infrastructure. I mean, these are all thousands of opportunities, precision agriculture, biotech, healthcare. There's a huge number of opportunities. But if you want to enable this finance, you need to be able to manage the risk. And the risk management has always been an issue. But now with technologies like artificial intelligence, surveillance technology or scanning technologies, retinal technologies, biometric technologies all coming to the fore, anywhere, anytime finance management is becoming a reality. You are able to have very powerful checking algorithms so that you are able to dispense loan in a matter of minutes, not take a huge and you are having alternative instruments to be able to do that. The fourth thing is payments. Whenever you want to enable payments, whatever be, whether it is a corporate paying to another corporate, business to business transaction, or B2C or whatever, digital payments is going to make the entire difference in the years to come. In fact, there was a report printed out by the Niti Aayog on the digital payments and the trends and opportunities in the future. And the opportunity for us is to create a $1 trillion fintech sector just by 2023. That's the opportunity. And more than $190 billion of this can come from mobile payments, because that's the opportunity for us. So now, if you want to bring all these things together, you have to leverage and ensure that the benefits of finance, access to capital, access to resources, risk management, ability to pay, and ability to reach your product or service to any part of the globe, that is the big opportunity for us. And that is why fintech industry can grow by leaps and bounds. And if you want to do this to the demographic dividend that we are talking about, which was the question that you asked, that how are you going to ensure you leverage this, we have to first inculcate in them a spirit of entrepreneurship, a culture of innovation, so that they can, think big. They can be bold to take on and create entrepreneurial units. And second, we have to create that ecosystem of innovation, entrepreneurship that supports them. So that is why startups or whatever will be able to grow. And finally, when I look at, what the fintech industry is composed of three major segments. The corporate segments, where large-scale digital transformation of the corporate makes them very agile for financial management and access to the global markets. Second is the MSME sector, where 70% of the economy of India or the labor of India is associated with the MSME economy. But only 29% of our GDP is associated with MSME economy. How do we transform from 29% to 60%? Because that's where the potential is, when 70% of the people are associated with the MSME economy. For that, we have to be very inclusive, and inclusivity is enabled because of digital technologies, AI, and so on. And finally, to prevent frauds, to leverage data to the maximum, AI and blockchain are going to make it very secure. AI is going to enable you to address pockets of development that needs to be developed because of the availability of data now related to where we need to focus on and where we shouldn't focus on. And technologies like blockchain is going to make any inclusivity a possibility, because you are now able to trace end to end, the flow of the financial instrument or the transaction or the supply chain and so on. So these technologies are going to come to the fore, and they're going to help enormously in the fast acceleration of the fintech sector.
No, thank you, Mr. Ramanathan. I think your summary was so apt, and in fact, 2 points I just basically I could touch base on, the one on the SME and another one the fraud. You're right that today SME sector possibly contribute 29 to 30% to the India GDP, and the target is to contribute something around 50% in next 5-6 years, which means every rupee being produced in the economy, 75% of that should come from MSME in next 5-6 years to achieve those targets, which means the focus has to be towards MSME, and that's what's happening. And I think Mr. Vasant touched base something, and I'm going to come back to you, sir, for that with the SME in mind. And you said that how we can create that ecosystem to basically serve that need. What is the basically keys to successful partnership between fintechs and the financial service providers, and how we can take it ahead? And to be very honest, sir, I'm conscious about timing, so I would request if you can keep some in a brief, that will be great. So.
Perfect. This is a very important question, because I think this mutual trust and a partnership is needed for this sector to go well long term. So if you ask me, I think what is very critical in a partnership between a financial services player and just a tech player, right? I think is to understand where the core competencies of each individual lie, and not to do something which the other cannot do. I think if you look at today banks and financial institutions in India, there are some things that at a global level that we Indian banks we should be proud of, whether it could be their liability base in terms of a strong balance sheet that many of them have. It could be the strong customer base that many of them have. Or it could even be a sense of, good underwriting and financial knowledge that any financial institution has had. Because the reality is that everyone knows that there are bubbles and busts and there are cycles. And lending is not a lot of people say lending is about giving money. But I think what people should realize, it's about giving money and collecting money too, which today you should not give unless you can collect it back. And I think a lot of our banks and NBFCs have gone through the positives of it and the downsides of it, and have learned what to do, and also more importantly, they have learned what not to do. Now, for a fintech player, it is very important for them to realize where they are positioned here, and they really should not compete not even look at themselves as competing with an established bank or a financial services player, whether it is in terms of their asset, their strong balance sheet liability franchise, or whether it is trying to underwrite and take calls in sectors which obviously banks have seen the rough side of it. I think that's where their competency should be. I think all fintechs and financial institutions should be very clear that their competency is on making processes smooth, getting technology to go to everybody, reaching out to making their processes efficient, and acquiring customers in a way that a bank cannot acquire. They should limit their skill sets only to that. When it comes to more the tighter aspects of lending, collecting, underwriting, understanding sectorial tailwinds, knowing what to do, what not to do, definitely should rely on the years of wisdoms that banks also bring in, and be very clear that they are just a layer on top of them and not as a competitor in any of this ecosystem. So I think be very clear that financial services is an industry that's evolved over years. It's not something that can be done overnight. Understand that there are a lot of operators who just work overnight. That's not about building a strong franchisee like a SBI or a Kotak or HDFC has been built over years and decades of discipline. So appreciate that, understand that, take the strong competencies from that, and then give your eligibility of processes, technology, scale, more customer pleasing tech, so that ultimately the customer wins and you are also safe working with these large mammoth but great institutions.
No, thank you, Mr. Vashant, for sharing that perspective. I think that was really great. And another question which I have for Mr. Ashish, just related to the fraud, basically. What are the strategy to ensure what you call the secure innovation through cloud?
Absolutely. Look, I think it is incumbent on the fintech sector, because just going back to what Vasant was saying, right? The larger financial services organizations have built, their reputation and their, let's just say the trust that they have with their consumers over a long period of time, right? The fintechs have been able to get more customers in a very short period of time, but which means that there is an implied trust. There is an implied trust when someone signs off to, do their digital payments through a platform that they don't know, when they don't know them as a bank. So they need to make sure that their security standards are absolutely the same as what the financial services companies have been doing for years, right? And this is where I think is a very, very important last part to play in terms of the regulator and the fintech industry all just coming together and ensuring that the consumer at the end of the day is not impacted. Because if there is a loss of confidence, we say that security is the stepping stone, right? It's without security there can be no innovation. It's the bedrock, right? So this is a very, very important aspect, and they need to embrace cloud. They need to embrace the shared responsibility model, which is available in all clouds, which means that the fintechs have full responsibility to secure their cloud environments to the same extent as the established financial services companies have been doing. So I think that is probably the one important thing that we need to be working at.
No, I think thank you, Mr. Bashish. I think for that was great, and that was really a good insight. In fact, I can see there are a couple of questions coming from the audience side, and that's all related to the same thing. One question, in fact, coming from one of our audience, in fact, in the fintech industry, the same thing. He's asking that while fintech solutions are helping bring about speed and convenience in the financial transaction, data security continues to be an area of concern. How can such data security related concerns be alleviated? So, in fact, the related questions were also that what role can technology play in preventing financial fraud? And I think some of those you touch base. You want to share more about that, Mr. Ashish?
Absolutely. Look, I think one of the most important areas when it comes to cloud and making sure that all of this data is kept safe is that you need to maintain your posture on a continuous basis, right? This is something which is both an advantage as well as a challenge in cloud. The advantage is, for the first time, compliance can actually mean security. Compliance never meant security in any other paradigm, right? Because for the first time, you're able to use automated compliance, automated security checking to enable that your environment is safe. So, in fact, with this in mind, we actually made some investments last year because we knew that this is the need of the hour, right? So today we offer what's called a India geo-fenced service, so that all the financial services sector, they need to meet data residency requirements. They need to make sure that all of their data is safe, and this is something that we really believe in, and I think is going to help both the consumers and the in the fintech industry to ensure that there's a confidence that data is the new oil, right? It's the new currency, and we need to make sure that it's kept safe.
You're right. Data is new currency, and that's what is happening, Mr. Bashi. So, I'm conscious about the timing, and there are many questions coming from the audience, but for the sake of the timing, I basically say that, in fact, I will try to close this one and say thanks to everyone for sharing your perspective. This was a really wonderful conversation. And to be very honest, I got many aspects from this. One, that how both partners can come together and try to leverage the opportunity provided by the country, young population, history of entrepreneurs, and more important, we know that this financial ecosystem is here going to stay, and plus point that we have learning from the developed market, so as we can secure our base with using a latest digital technology and using the technology which can keep growing as well as can keep us safe. With that, gentlemen, I will let you all go and say, it was really wonderful conversation, and say thank you for joining today's panel discussion. Thank you.
Insightful is an understatement for this discussion. A big thank you to our panelists for giving us so much to think about and look forward to. With this, ladies and gentlemen, we conclude the Dun & Bradstreet BFSI and Fintech Summit 2021. It has been an immense pleasure hosting you all at this summit, and we are grateful to each one of you for making this occasion a memorable one with your presence. I would like to thank once again our partners for their invaluable support. Our principal partner, Checkpoint Software Technologies Limited. Our technology partner, SUSE. Our life insurance partner, Life Insurance Corporation of India, LIC India. Our co-partners, Bank of Baroda and AU Small Finance Bank, and all our publication partners. I also want to thank all our dignitaries who took the time out from their busy schedules to be with us here at today's summit. Our chief guest, Dr. Vivek Debroy. Our guest of honor, Dr. Krishnamurthy Subramanian. Our special guest, Mr. Jean Pen, Mr. Rajnish Kumar. All the members of a panel discussion and fireside chat sessions. The host of the summit, Mr. Avinash Gupta. And last but not the least, our audience members. I am certain you all have gained some valuable insights from today's proceedings. I would like to remind you that you all can share your views and opinions on today's proceedings with us on your social media channels using the hashtag DNBBFSI and hashtag DNBFintech. I'll repeat that once again, hashtag DNBBFSI and hashtag DNBFintech. Before we conclude for today, we had a few important announcements to make. Please remember to visit our partner and product stalls in the lobby area before you leave. These stalls house very interesting information and content regarding our partners, products, and services. Also, your feedback is highly valued. Therefore, we request you to please share your feedback with us by clicking on the feedback icon in the sliding menu bar. Lastly, we also have a briefcase feature in the menu bar where you can preview and download company, product, and services information about Dun & Bradstreet. Ladies and gentlemen, this event might have come to an end, but we have just begun reimagining the financial services in a digital India. Thank you for joining us today. Take care, stay safe, and goodbye.